We've got Sameer Dalal of Natwarlal and Sons joining us, as well as Nilesh Jain joining us this morning to answer all of your questions. Good morning to the both of you, gentlemen, and thanks so much for taking the time. Let me start with the first question on Dr. Reddy's Laboratories, okay? And this is from Mr. Ekambaraya, who's writing in from Hyderabad. He's holding at a level of 1,200, which is more or less where the stock is currently at. And considering that their exposure to the US is significant, he wants to sell it and buy something like a Persistent or a Worry Energies or a Suzlon. And by the way, from that list, Worry also has exposure to the United States. But given the current context, Sameer is wondering whether to do that, whether to sell out of Dr. Reddy's Laboratories because he's not really making too much of a loss and move to one of the stocks he's mentioned.
So no, I don't recommend he sell Dr. Reddy's, right? So I think valuations are relatively inexpensive. The worry that everyone has that Donald Trump is going to put a certain amount of taxes on the pharma space, I think that's a bit overdone for the simple reason that India is predominantly a generics manufacturer. And generics to a very large extent will not have a problem because we are actually helping him bring the prices of medicines in the US down, right? If you also look at the kind of ANDAs and the filings that are there from Dr. Reddy in the US market are quite large. Also, secondly, US is not the only market. Yes, it's the biggest market, but they also cater to Europe, the rest of the world, India operations, all of those. Those will all continue as normal. Given the valuations are not very rich, given the fact that we believe the growth opportunity still is extremely strong for the pharma space over the longer term, we would suggest staying invested. And to the question, you rightfully said Worry Energy also has some amount of exposure to the US, and so does Persistent Systems, right? Even IT companies have a lot of exposure to the US. So it's not like he's going to be able to wash his hands of the US exposure that is there, but I highly doubt that pharma is going to bear the brunt of anything. Even when these 50% tariffs have been put in place, you can very clearly see pharma has been one of the sectors that has been spared because he realizes the value of it. So stay invested. I think there is more money to be made in Dr. Reddy's.
I just realized that tomorrow is Raksha Bandhan and, it's exciting times. Kickstarts the festive season, if you will. And it's such a beautiful event, right? Where you expecting, and I'm sure that are you going to tie a few Rakhis tomorrow?
Yes, for sure.
So,
my brother who's here from US, so yes, of course, it's going to be a good day.
So you're looking forward to the gift that you're going to get?
I'm looking forward to the gift, yes. I've selected my gift already,
You've
by the way.
selected your gift. Oh, is that how it goes? All right,
yeah.
So on this occasion, and I'm pretty sure that a lot of our viewers tuning in, like Mahima, are not really going to be too happy with getting a stock as a gift, but I'm going to ask it anyway. Because what better to give your sibling than something that's going to appreciate over the course of the next several years. So a quick question to the both of you. Nilesh, I'll start with you. If you were to buy 2 or 3 stocks today for your sibling to gift it to them, what would they be?
Well, Alex, it has to be a fundamentally strong company as well as the technical structure has to be good. So that's LIC that's looking attractive. We have seen a bit of a consolidation in this particular counter. It is trading at a corrected price. So from here, the risk and reward is also favorable and positionally looks attractive for 1100, 1150 kind of levels on the upside. So LIC, it has a very strong support at 850, 840 zone. So with the stop loss keeping near about those levels, LIC is a buy and the positional target comes around 1150, 1200. And then the another stock would be Cummins India. Again, a very good setup in this particular counter, a good rounding bottom formation can be seen. Positionally, we are expecting this particular stock to move beyond 4,000 kind of mark, and quite possible 4,300, 4,400 kind of levels can be seen over the years, and the stop loss can be placed somewhere around 3,500. So Cummins India will be another stock.
Both incidentally companies that have posted their earnings after market hours yesterday, and both of them had a very good set of numbers to speak of. LIC particularly, you had the value of new business margins improving, and for Cummins you had exports and domestic revenues firing on all cylinders. Sameer, what would you pick?
So given we're talking about giving a gift to a girl, I'll pick one stock, which is IGIL, International Gemology India Limited, which is basically the company that does the testing of the gems in for lab grown as well as for natural diamonds. They've got a lot of their setups in place, and as the number of diamonds that get certified keep increasing, the operating leverage will start playing out. The numbers are quite strong, cash flows are good, debt-free company, growing business. So I think that is one great investment that one can make. And again, sticking to the theme, since we're giving it to a lady, I'll give a company called First Cry, which takes care of new mothers' requirements and young children's requirements. Basically, it caters to children from 0 to 12 and maternity. We think, this is a very niche space. Of course, competition is there from the likes of Amazon and Flipkart and all of them, which also sell similar products. But this becomes a very easy place to source your needs for young children. They're developing their in-house brands for clothing, for toys, for diapers, products. And as the in-house brands, as a percentage keep growing and the margins keep expanding, and as they keep scaling up their operations, we think, First Cry is one of the stocks over the next 3 to 4 years that could be a serious multi-bagger given the operating leverage that sits with it. It's again a platform-based company.
Okay, all right. So IGI and Brainbees are the two counters that Samir has suggested. We've got our first caller for the day. Pradeep is calling us from Visakhapatnam. Pradeep, hi, a very good morning to you. I believe you have a question on AU Small Finance Bank.
Yeah, very good morning to the panel and all of you, and happy Raksha Bandhan advance.
Wishing you the same, Pradeep.
My query is regarding AU Small Finance Bank.
Okay.
But is the right time to pay AU Small Finance Bank or any other bank in banking sector?
Okay, and this is from a shorter term perspective. What's the time period that you're looking at?
Yeah, it is from a shorter term perspective. Yes.
Oh, okay, all right. Pradeep, I'll take this up with Nilesh first, and then also take Samir's opinion on AU Small Finance Bank, because they've gotten approval for being a universal bank now. But Nilesh, your view on the charts first.
See, technically speaking, the stock today have filled the gap area that was seen in the month of July, and we have seen a profit taking at the high levels. But overall, the major structure looks more sort of a sideways to positive. It has a very strong support at 720. So one should keep a stop loss at 720 and stay put. We can expect a gradual up move towards 825 to 840 on the upside. And it is facing constant resistance at 825, 840 zone. That's the major hurdle for this particular stock. A breakout above that will confirm and will open further upside towards 900 to 1000. That's the position target. But purely looking at the short-term trend looks positive. Stay put with a stop loss below 720.
Okay, all right, and your quick view on AU Small Finance Bank, Samir, because they've now received an approval for being a universal bank.
Yeah, so becoming a universal bank has a two-edged sword. So obviously it has its benefits in the fact that they can do more of the lending to the regular corporate loans and, all of those kind of things, rather than only being more focused towards microfinance, lower income housing, lower income, So what it has as benefit is that it gives you more stability in the fact that your loans have probability of lower NPAs if you do your due diligence better for these larger and more prime kind of lenders, but it also reduces your NIMs. So it's going to be a transition. It'll take time. So for the time being, I feel AU Small Finance Bank, while it's going through the transition over the next 2 years, will not see great traction in the fact that NIMs will see compression, profits will grow, but at marginal rates. So I think AU Small Finance Bank for the time being can be an avoid. Maybe a year and a half from now, when we see what is exactly how the bank is shaping up, it might turn out to be a better buying opportunity. So I would avoid that. I think there are better opportunities in the banking space.
Okay. All right. By the way, we had a great conversation with Abhizar Divanji this morning on India Market Open. You should find that on YouTube. This was about AU Small Finance Bank, which will likely not be called that for very long. Let's talk about Titan. It was in the news because of numbers. Let's see how it's doing on the charts right now. It's up about 1.3%. Decent set of numbers, if I remember correctly, on Titan. But let's talk about the shorter term perspective, because Kantibhai Mahasuri, who's writing in from Mumbai, is looking for a 5-month time frame. He wants to invest 50,000 rupees in the stock. Would you say that this is a good opportunity to buy, Nilesh?
See, Alex, recently we have seen a good base formation near about 3300 to 3320. So that has acted as a very strong support, and we have seen a strong rebound as well. So from here, keeping a time horizon of 5 months, I think one can accumulate this particular stock. We are expecting a gradual up move towards 3600 to 3650. 3650 is again a major hurdle that seems unlikely to be taken off on immediate basis, but that will take some time. So the structure wise looks good to accumulate, buy in a staggered manner, keep a stop loss below 3300, and for a 5 months kind of time horizon is a buy.
I believe we've got a caller from Gurugram. Manav is calling us. Manav, namaskar. How can we help you today?
Namaskar, good morning. Good morning to everyone. First of all, I want to congratulate NDTV for breaking out that illegal dabba trading scam. Though I wanted to congratulate much earlier but wasn't able to connect last week. But nevertheless, it's never too late.
Thank you so much. It was meant for... and I'm hoping that you spread the word as well, Manav, because the idea was to...
I shared the story on the social media itself also.
Yeah.
So, my today's query is on Bharti Airtel. Since the promoters have sold a stake in the block deal, so I was also, looking to enter Bharti Airtel. Will it be the right time to enter Bharti Airtel for a long-term perspective view for like 4 to 5 years?
Yeah, that's a good question. The stock is down on the back of that block deal that took place earlier today, 2.7, 2.8% lower. So, Manav, I will take your question to Samir. Samir, on the fundamentals, is this a good opportunity for you to start accumulating? We saw the results not too long back. Nothing to really complain about, but the ARPU growth was not tremendous. I know their target is to go towards 300. They are the highest in the industry right now.
Absolutely, yeah. So the results were good. But actually, you're talking about the ARPUs going to 300. It will take time. You can't expect them to jump because if you remember when Jio finally started charging, I think the ARPUs had initially started at that point of time at closer to 160. So from 160, they scaled up all the way to 240, which is fabulous. And in the meantime, you got to also realize that apart from the ARPU scale up, they've also had so many new subscriber addition that the operating leverage has started playing out in a meaningful way. Now, the problem for them to some extent will lie in the fact that growth from these for the number of subscribers will start getting limited because our telephone penetration, mobile penetration has reached actually quite a significant level. And to keep scaling that up is not going to be easy. But where they have growth coming in and where they are also focusing is on the broadband at home. I think that opportunity is still extremely large. Jio has the lead in that, but I think Bharti is doing a great job of catching up there. So I'm a user of the Bharti internet in my house, in my office and things, and I think the service is fabulous. So I can tell you that they're doing a great job of that as well. And I think as that scales up, what you'll see is more operating leverage kicking through. And as the ARPUs go up, you will see their ROEs also moving up because the incremental cost is not going to be as much. Whatever is there is just the 5G towers that they're laying. Beyond that, it's going to be a lot of positivity for cash flows. Also, if you see the operations in Africa continue to do better, they're getting more traction there. And there also, we believe the profits will keep increasing. So overall, we are very positive on Bharti. Valuations are a little bit rich, which is why also I think the promoters are taking some money off the table. If the stock comes closer to 1750, 1700, yet they would be expensive. I'm not saying they'll be cheap, the valuation, but I think given the duopoly situation that the telecom industry faces, even though there is a third player, I'll stay duopoly because two of them are really driving the market and capturing most of the business. We believe that these valuations can remain in the range of 35 to 40 times earnings. So 1700, great time to buy. Hold it for 4 years. I think there's lots of money to be made in Bharti yet.
Okay. All right, lots of money to be made in Bharti yet. The next question is also a fundamental question, and a quick one on this one. Railtel is the name of the counter, and Afreen from Hyderabad is asking for a fundamental view. Is this a good time to buy the stock, Samir, in your opinion?
Yeah, I think valuations are not so challenging anymore. Company will continue to get its order flow. They're already sitting on decent. Yes, it's been a little lower than what everyone in the market would like it to be. But look, the Indian Railways is going to constantly be expanding. So I think Railtel will get its order share and it'll keep growing. So hold on to it.
Okay. All right. We've got our next caller. Ayush is calling us from Greater Noida. Ayush, hi. A very good morning to you. We just talked about Bharti Airtel. But I believe your question is on Jio Financial. Is that correct?
Yes, correct, ma'am. Very good morning.
Okay. Good morning.
So I have Jio Financial Services stock. 1,000 shares I have. and I have purchased it at 295.
Okay. All right. Yeah, you're looking at this from a longer term perspective, or are you looking at the charts, Ayush?
For shorter period, I'm looking for next 6 months, whatever will be the trajectory.
Okay, all right. So you're sitting on profits of around 25,000 odd rupees right now. Nilesh, do you think he should continue to hold for further upside, or should he book profits right now?
We have seen a good momentum in last couple of trading session, although we have also seen some bit of profit taking, but the major structure looks positive. The stock is constantly trading well above its 21-day short-term moving average and also 50-day moving average. That support is somewhere around 310. So looking at the overall setup, looks good to me. One should keep a trailing stop loss at 305 in order to protect the gains that one is making. So overall, we are expecting a move towards 340, 350 from a very short term perspective. So stay put, keep a trailing stop loss. Structure is looking positive.
Let's talk about MICEL, which is MIC Electronics. It is currently trading at 49.89, if I'm not mistaken. Nearly 50 rupees. There you go. Yeah. And we've got Mr. Subramanian, who's writing in from Bengaluru, who's bought at levels of 65 rupees per share. He's got 1,500. Should he book or should he hold on? Nilesh, what's the view on the charts?
The structure is looking extremely weak. We have seen a continuation of a lower term and lower term formation. Since last 1 year, the stock is constantly in a downtrend. So looks weak, and we are expecting further downtick towards 45, 40, quite possible from a short to medium term perspective. So sell on rise kind of structure, whatever pullback you get near about 54, 55, use that pullback as an exit opportunity and move to the better options available. This stock is not looking that promising, looks weak on the chart.
Okay, all right. So that's the view with regards to where the counter stands. We've got our next question, and this is from Nagakumar, who's writing us from Hyderabad. And thank you so much for your compliments, Nagakumar. We really appreciate it. He's wanting to invest 5 lakh rupees right now, and he's asking whether he can go ahead and invest this amount in Siemens India or Siemens Energy from a longer term perspective of 3 years, and which one is advisable on the back of better earnings. Samir, I'll come to you on this one. Which one would you suggest? And 5 lakhs is a big capital. Would you recommend him to diversify into some other counters as well? Whatever your recommendations are.
So it all depends on what his investment portfolio is. If this is his first investment in the market, then obviously I'd ask him to diversify. But if he has other investments, then, honestly, if you ask me, I prefer Siemens, the main company, not Siemens Energy, the newly listed one, for the simple reason that I think the traction and the operating leverage and the business growth that is going to come through in Siemens by itself is going to be phenomenal. Valuations are rich. I'm not denying that fact, but we believe that this business will continue to grow, and Siemens being 75% promoter held. Given that there are lots of shareholders who just don't want to part with the share. So if you actually look at the free float, it's small. So the kind of premium valuation that it gets, it will probably sustain. So my personal advice is to go for this, but it doesn't hurt to even split your money 50-50 into both if you like both these companies. And if you're the first time investor in the market, I would definitely tell you to diversify at least and have 10 stocks in the portfolio and not only 1 or 2.
Okay, on that note, we have to slip into a very quick break. Gentlemen, do stay with us. We'll be back on the other side to take more of your questions, so do stay tuned.